Trading pullbacks, it's a time-tested way of zeroing in on a location to trade at. And whether you're using support and resistance, trend lines, moving averages, or even fib retracements, trading pullbacks is actually a viable method of trading. Now, pullback trading, it's based on the natural ebb and flow of price action of any trading instrument. It doesn't matter whether you're day trading or swing trading, it's a sound approach. And it's one that fits one of the major things that a market does. Markets mean revert, and they consolidate. Pullback trading, it zeroes in on the mean reversion tendency. So by using pullbacks as part of a trading strategy, traders are actually using the mechanics of the market. But what if a market doesn't pull back to your desired trading location? There's going to be times that a market is strongly trending and it's not going to retrace far enough to come into your setup zone. And you need a way to deal with that. So imagine that you are a swing or position trader and you're using fibs, for example, to measure the retracement of a corrective move. In this example, we have an impulse move to the upside, which gives us an overall uptrend. So you want to position yourself in this trend. Since markets can pull back into impulse legs a certain percentage, now you don't need to use rigid Fibonacci numbers. You zone in on a certain price point on the chart. In our trading example, you can see that your pullback did not come into your trading zone. And that dark red box shows how much more room you needed to fill. Price did not even retrace far enough to test the new price structure that was resistance, now acting as support potentially in the same location. And we call that confluence. So if you only traded the one approach, trading price retracements, you miss getting on board this move. And traders, when they miss a move like this, they have a tendency just to toss out their trading plans and mark it in so they don't miss out. Well, that's the wrong approach. There are a few ways that we're going to look at that's going to allow you to not only have your pullback zone of opportunity, but also position yourself so you don't miss trades like this. So remember we talked about mean reverting and consolidating. Now here it's the consolidations that we're going to look at. So when a market consolidates, to resume the trend, you need price to break out of the range. Now breakout trading carries its own risks, but I talked about failure test trading before, and you can position before the breakout actually occurs. Now let's take a look back at this previous chart, and we're going to see how we could have positioned long in this market. It doesn't matter if you are swing trading for bigger gains or day trading for income. This concept applies to any approach. This is a shallow pullback in terms of the overall length of the full impulse leg. We have a price pattern that we can use to get position in this uptrend when price transitions from consolidating to trending. At number one, prices formed clear tops and bottoms in the horizontal range. Traders will position upon a breakout of this range, but they have the higher pivot before the range to concern themselves with. And you can see price did have a slight rejection at resistance prior to the big break. And traders may have considered that a failed test of resistance, exited their positions when price closed back below the pivot resistance. At number two, price action shows tests of lows and were quickly regained two very obvious times. Astute traders could position inside the range at the close or the break of highs of those failure test candles. Now traders that did, and we see there's evidence of that by the larger momentum candlesticks, were well in profit before the ultimate resistance test occurred. We did not need to see a full retracement to get involved in this uptrend. We did not miss out on the move, which could have resulted in a trading plan breakdown, as missing the move becomes more important than following your trading strategy. This consolidation pattern is not hard to spot, and as long as the resistance levels in an uptrend or the support levels in a downtrend are well defined, you have a viable means of entering the trend. Now, the most important part of this trading pattern is to see some type of testing of lows or highs in a downtrend, as it's going to give you an objective entry and a defined risk point. Now, I'm always cautious with trend lines because we often see them break, but price gets soundly rejected at the horizontal levels. Regardless, trend lines are a useful tool that can be used multiple ways in your trading. Now, I chose a sloppy trendline example to show that nothing is ever perfect in trading. There are a few ways in this example that you could have joined in on this downtrend if your pullback did not come into the trading zone. Number one, once we're able to draw our support trend line, we can simply copy that to the upside for our resistance line. At two, price breaks the trend line, and as mentioned before, horizontal levels can wield their power, and this caused price to retrace. At three, we have a test of the broken trend line, support to resistance, and then price drops with momentum to the downside. And while you may opt to not trade the initial breaks, the power of this comes with being able to judge the break of the trend line and then add to the probability of a break of the horizontal lines. And a strong break may have you getting positioned before the break using some micro chart pattern. In our example, the break is strong in comparison to other candlesticks. We also have a falling 3 candlestick pattern that is a continuation pattern. And traders may opt to use pending orders below the lows of the 3 small bullish candlesticks to position before the momentum thrust. You should see that you don't have to be a pullback trader or a breakout trader. You can use both of these transitional chart patterns in one trading plan to ensure that you don't miss playable moves in your instruments that you are trading. It takes work, and these are not standalone trading plans. You still need to test them, but also ensure that you have risk protocols in place for every trade that you make. And you must know where you'll get out if you are wrong, and you will be on a trade. Profits only come when you exit your trade, so ensure you know exactly how you're going to take profits. Now look, trading is a great business, but it can take years, if ever, for you to find the success that you're looking at. And we've started something we call the Inner Circle at Netpicks here, where traders, both new and experienced, can access our trading strategies that are used every day worldwide. Not only will you get our tested trading systems, but we also ensure that you fully understand how to trade. You are going to get our trading plans that have proven themselves in markets of all conditions. You will get outstanding support for everything trading related, because your success is always ours as well. And you'll get the opportunity to find what type of trading suits you best. Swing trading, day trading, options trading, and you can find out more here.